Nigeria raised $4 billion in its latest Eurobond issue on Tuesday to fund the 2020 budget deficit. Meanwhile, the Debt Management Office is conducting a bond auction today with a view to raise 150 billion naira in the local debt markets. Chuka Nwachukwu, the head of bonds trading at UBA, joins me now to discuss developments in Nigeria's fixed income markets. Chuka, it's a pleasure to have you again, as always. First of all, just just to reflect on that Eurobond issue and its implications. Nigeria raised $1 billion more than it planned to, so some may suggest that that is more money coming to the market. But on the flip side, they do have a target of $6 billion, so there's still a shortfall of $2 billion, and potentially they may have to come back to the local markets to raise that. So all that considered, how do you see the government's borrowing activity impacting the direction of yields over the rest of the year?
Okay, thank you, Wally. Like you rightly said, $4 billion was raised as against the initial $3 billion that was proposed. It was, of course, oversubscribed, and that's an indication that the investors have great confidence in the Nigerian government in terms of borrowing, issuing, and all that. So, it also tells a lot about the borrowing pattern, even though a lot of issues have been raised as regard the over-borrowing. But then, if you look at DMO's fiscal policy framework, is part of the borrowing is part of it. Now, on the issue of how it impacts on the local market, we saw that yields actually trended slightly downward with the news of the borrowing. Last week, we saw yield move slightly upward with the movement of NTB result from 6.8 the previous one to 7.2 last week, and we saw investors, traders reacted to it, and that's kind of like prompted you to move up. Going into this week with the Eurobond auction yesterday, we saw that this will kind of like somehow affect the borrowing pattern, though there's still a bit deficit in terms of borrowing, but I don't think that the DMO will borrow heavily in the local markets going into the end of the year.
But in terms of the issue yields for that Eurobond, so for the 7-year ahead was 6.125, for the 12 years just over 7, and for the 30 years 8. Would you say Nigeria, that was good business for Nigeria in terms of what potentially those bonds could have been issued at, say, a few months ago?
Yeah, it is. And of course, and that's why you can see that that's why it was oversubscribed. If you notice, though it has its own advantage. One of the advantages is the fact that is going to be more money for the foreign reserve, and then of course more dollar coming in, and of course meaning that we have CBN will have enough dollar to cushion in the effect of the demand on the FX side. So that is a plus. On issue of whether it's a good business for the Nigerian government, it is a good business for Nigerian government, considering where the youth are presently and then what they got it for. So it's a win-win situation for both the government and then the investors as well.
Right. Let's talk a bit about the foreign reserves that you just mentioned. And everyone is now expecting that there's going to be that uptick in reserves after this transaction. Would you say that that could have a psychological impact on how investors view the outlook for the currency? How supportive would you say that could be for the naira in the short term?
Yeah, huge boost. It will give confidence, for investors, number one. Number two, give confidence to CBN as well, more confidence to CBN as well, because, apart from the oil price still within that 75 barrel, dollar per barrel, this is an extra income, extra revenue going into the reserve. So it will give a huge boost. And then, of course, investors too looking to invest in Nigeria, people bringing in inflows and all that. It's also a huge boost to them to say, look, the government have enough liquidity in terms of they want to go out. The issue of having enough dollar to to go out when they need to go out, after the maturity of their investment won't be an issue.